Want to bring in Robin Cross of StoneX in Chicago and do our weekly discussion about this lumber market. And man, we had all kinds of housing data that came out in the last week, and you kind of teased it last week when we spoke. Tell me what kind of impact that's having on the trade here.
Man, big one, Marlon. Good morning. Thank you for having me. Well, before we dive into it, let's go over some prices. Right now, September lumber, which will be expiring on September 15th, is trading at $496.80. That's up $1.40, so that's your spot month with 35 trades. November, which is the lead by open interest, is $475, up $460 with 53 trades over there. Not horrible volume to start the day, but you know we've had a lot of action, a lot of movement, so naturally we should have a lot of volume. Well, since March. Speaking of those housing reports, since March, I've been literally reporting on the air a warning of lumber prices impending doom. And that was really due to the current state of the economy and the massive inflation that we're all experiencing, right? I believe the massive break from the 1477 high we posted in March down to the 469 swing low is definitive proof that that sentiment is well underway, right? Let's just take a look at our most recent action just for an example. On August 3rd, we traded at a recent high of $720. At that time, we were a premium to cash. So I had my doubts, which I said on the air. I definitely had my doubts. Well, we go all the way down to the previous swing low of $480. But at that time, and that we did that literally in just a couple of days. And at that time, that was my original downside objective. You know, I believe the market was oversold due to the magnitude of the break, number one. And number two, we had low cash inventory. Guys were really sitting on their heels, not doing anything. So I think that the culmination of both things, we just had a really good oversold bounce that took us all the way back to $633.70. What's interesting about the $633.70, that was a $153 rally in just 4 days. Well, since we were no longer a discount to the underlying cash market and we became a premium in just 4 days, mills and hedgers in general then re-engaged. And, you know, technically speaking, Marlon, that was a perfect failure, a perfect technical failure into key technical resistance, which was the 20 and the 50-day moving average. We couldn't even get through that, right? So this week was a continuation of our downside trend. So we basically bounced the oversold, and then now we're back to reality, so the markets fall. So this week alone, we fell from $633 down to today's low of $470. But as I've been indicating, 475 has been a multi-year, multi-month low, and traders should really look to lift some hedges, take that cash, apply it to their high purchases, and make themselves competitive, right? And I think you should also look at forward selling because we are still the cheapest place in town to buy lumber. You know, the mills are definitely getting down there. You know, I heard reports of $550 yesterday from the mills, but, you know, the board's still a decent discount, right? And I don't believe the industry is interested in selling a $100 discount. This was obviously all long liquidation that got us down here to begin with. So we'll have to see how this trades out. And I do believe during expiration, and you know, I have a 26-year experience tomorrow, Marlon. I've been here 26 years. I do believe that the mills during expiration, you see them tighten up cash. Whether it's real or not, it's the fact of the matter is you have a difficult time buying lumber. You know, their order file gets out a couple of weeks, and I do suspect that will happen, you know, as we approach September expiration. You know, whether it be a sell after that or not is remain unseen. But, you know, typically guys cover their stuff going in expiration. You know, you don't get any new selling because there's very few deliverers, right?
Yeah, right,
it's only customers themselves, mills themselves that make the delivery, so customers themselves only sell it basically as a hedge against cash inventory. So I would still be cautious, you know, and I still believe housing reports, we're going to be talking about this for the next couple of months, how they continue to be down, providing interest rates stay high. And until we get a change in that, or in November, a change in guard, I think that it's a sell rally mode in this market, you know, to infinity. So,
well, excellent information. Well, thanks, Robin, for pointing that out. And yeah, it has been a wild ride. We're down at some of the lowest levels I've seen in a couple of years now. We'll check in again next week and see if we have more housing info by then. We're talking with Robin Cross. I'll take a look at livestock after this.